Hey, everyone. Welcome to this week's Multifamily Investing Academy podcast with me, Charles Dobbins, your host, the multifamily attorney, and I have a treat for you today. I'm recording this call in January. Now, you all know what happens in January. We start talking about taxes, and I always get the call from my students and my clients, Charlie, can you recommend an accountant? Folks, I'm going to recommend my accountant to you, and you're going to meet her, Christina. This woman has done wonders for me and how my taxes are filed, and I want you to meet her. Listen to this podcast. It's an absolute laugh ride. If you could ever think that you could have a lot of fun with an accountant, we did. All right, so listen to this call. You're going to be able to click on the show notes at the bottom. If you want to book a time to talk with Christina, I highly recommend it. She saved me so much money. She set my business up on a tax plan strategy that is like nothing I've ever seen before. I cannot recommend my accountant high enough to you. So enjoy this podcast, and I'll talk to you on the other side. I can't speak highly enough about the service and the professionalism that I've got out of Christina's office. It's been absolutely fantastic. So let's keep going here, Christina. So tell me more. You got my information. You plug it into your program, and then what you ended up doing was coming up with a PowerPoint presentation for what you could do for me.
Right, exactly.
Yeah.
And everyone is different. So it takes a lot of time, and my whole team, it's not just me, but of course I'm the one that present it. And, but I've got my whole team working on it and doing different scenarios and going, through our software and looking at different strategies and how they may or may not, help you depending on your situation. So each strategic tax plan is what I call it, the STP, is customized to each individual client. So no two tax plans are exactly alike, that's for sure.
Yeah.
And so I take your situation, depending on your lifestyle, your family, your business, your personal expenses, your business expenses, look at your net worth. I mean, there's so many things that I'm able to look at, whether you utilize a home office or not, or do you work outside of your office? I mean, there's so many, just having a home office, and there's just so many different ways that you can use it to benefit, by reducing your tax liability. And that's just a small thing. That's not even, my more advanced strategy. But when you look at it, you look at the numbers, I'm like, oh, that may really make sense. We're talking about usually tens of thousands of dollars that you can save depending on how your home office is set up. And the great thing is, we implement everything for you. Right. So we don't just tell you this is what you need to do, but we also implement everything. So if you need to change your entity, we do that. If we need to set up an entity, we do that. If you need a home office, we got the contract, we got the invoice, we got the operating agreement. We've got,
Folks,
everything.
Let me tell you, that is exactly right. I needed an operating agreement for some reason on one of my entities, and I'm an attorney. So I have them at my fingertips, but it had to be a special one for what we're looking to do. I just emailed Christina's assistant, and boom, it came right over, right there. And then let's kind of go through some of the things that you changed for me. We can, we don't have to get into numbers or anything, and let me tell you something, folks. The tax savings that we're talking about were very substantial when she went in and changed a few things on my return. And just even a little fast forward, when she had finished my return for the first year that she worked for me, I had some IRS crap going on from legacy stuff that I had to get cleaned up. So I had to get a bunch of my returns together. I got 2 of my old returns from the old guy, and then I get Christina's return. And you would think there was 2 different people. You would think we were 2 entirely different businesses. The returns that the guy did for me were just like plug and play. Christina's had thought behind it. It had strategy behind it, and you could see it in the return. It was I was like, oh, this is fantastic. So let's talk about some of the things that you did. Let's talk about one that I'm still reeling from. The guy it makes me so mad that this guy could have done this for me years ago, but never even thought to do this. So you had me take an online questionnaire. You said part of the process was you sent me a link, said, fill this out, and then the results come back to me. Tell me what that questionnaire was all about.
Right. So for you, Charles, and one thing that I do with some people, again, depending on their situation, is maybe have their organization or their entity that maybe they've already set up, but how is it taxed? One of the things that you can do is you can tax it as an S corporation.
Okay, so I'm an LLC. I was an LLC, and
Yes.
I was just, I think when I filled out the questionnaire at the Secretary of State's office, it asked me, how are you being taxed as a partner or what have you? And that's just with the Secretary of State's office. Then every year that I went and did my tax returns, I just, my accountant said, oh yeah, it's a partnership or whatever it was, or a single purpose entity, whatever box it was that he checked. And that impacted how my taxes went through. Now you come along and you tell me we're not doing it that way anymore. So what did we do?
So, the way you were set up at that point is that all of your income that you made, not only were you taxed at your ordinary income tax rate.
Just for the record, everybody, Christina knows I make a lot of money. She finds me incredibly attractive, not because of my good looks, it's just because she saw my tax return. So you changed my structure from what it was before to an S corp, and because you knew, you plugged it into your system, and you knew that, hey, we do it this way, we can save some money.
Right. Because most people, and again, if you're already an S corp, I get a lot of clients that are already maybe an S corp, and that's great. There's lots of other strategies, that we can use. That's just like low hanging fruit. Oh yeah,
absolutely. This is just one of like 10 strategies that you got me in. Yeah.
Right. So, most people, when they set up an entity, if they're just an LLC or if they're a partnership or their file is a Schedule C, they're paying not only their ordinary income tax rate, but they're paying that additional 15.3% self-employment tax. 15% up to $135,000 on their income. So now, if you can say that off of that, you're getting into tens of thousands of dollars, plus even beyond that, it can be 3%. And what the IRS requires. So here's another thing too, is even I've seen a lot of clients when they become clients of ours, they may have filed an S corp, but their accountant is doing it wrong, not doing it correctly, because they are. And that's why a lot of accountants don't do it. And this is why your accountant didn't want to set you up like this, because there are a lot of rules and regulations around it, and they're scared of it because you've got to be engrossed in it. Yeah. You really have to know it inside and out.
Okay.
So, excellent. I've been doing this, over a decade. I've been an S corp for years. I have studied this. I've taught classes. I've gone to classes. So anyway, one, you want to make sure you do it right. Two, you have to pay yourself a certain salary. And that's what that survey was for. Yeah. So you pay yourself a salary, and you want to get that as low as possible, because that you will pay self-employment taxes on the salary, but then anything above that is just going to be considered a distribution, and you don't pay self-employment taxes on that.
Let me stop you right there, because I want everyone to understand this, okay? So I took this questionnaire. I didn't know why I was taking it. It asked me 150 questions or something. What do you do this? Who changes the toilet paper in your office? Who does it? Stuff like that.
It wasn't that bad.
It was pretty darn close, okay? And then I hit the enter button, and it comes back and says that I should be paid based upon all of the things that I do in the office. I should be compensated at a rate of $90,000 per year. And then I thought to myself, that doesn't pay my bar bill at my country club.
Right.
All right. So how can I said, Christina, this doesn't make any sense. What does this $90,000 mean? And your response back to me was, oh, that's great.
Yes.
I'm like, well, explain to me how that's great for me.
So one thing too is when I do talk to clients, and maybe they're already set up as an S corp, they may already have a salary, and I'll ask them, how did your CPA come up with that? Or how did you come up with that? Whether it was your CPA or them. And they said, well, we just kind of plucked it out of the air. And I'm like, oh my gosh, because that's the one thing with S corps. You have to have documentation for substantiation, basically for your salary. And that's what that survey does. It gives you substantiation. That survey, that's all that its whole purpose is to substantiate your S Corp salary, and it's based upon all the past tax courts and the rules and regulations. And so, and then some clients will tell me, because I do work with a lot of, attorneys in addition to investors, but maybe the attorney will say, there's no way I could replace myself for $90,000, or that I could, replace and hire an attorney for $90,000 in where I live, or maybe it might be $50,000 or $75,000. But see, that's the beauty of it, of that survey, because with that survey, and you just think about, like, even in your own business, how much of your time is spent not just on legal services, which is what, most attorneys, their whole purpose is to provide legal services, but how much of their time being a small business owner is spent in management, consulting, and even marketing their business.
Right.
Changing the toilet paper, or cleaning the home office, or talking to me. It's so funny because I'll be talking to him. I said, case in point, exactly what we're doing right now. You are right now a manager. You're wearing the manager hat. You're wearing the consulting hat. You're not being an attorney right now.
Exactly.
You're being a manager. So that 90,000 doesn't necessarily mean 100 of you being 100% of an attorney. Well, you answer those questions and you can prove it out yourself. And now we have that report. If you were to be audited, we just give them that report and go, yeah, here's how we substantiated, that.
And so now my payroll, because you got me on payroll now too. And, so I'm paying myself a salary based upon that report. My 401k contribution comes out of that. But I also pay,
withholding,
withholdings. And so that is, my self-employment tax is now based upon 90,000.
Right. Instead of the full profit that you made, which is way more.
I know.
So much more, because you make so much money.
I cannot, so far at this stage of the game, I cannot outdrink my income, which is good. It's a good thing, because that would be really bad. $90,000. Okay, that's child's play in my book. So now all of a sudden, that one burdensome tax that I dreaded every single year, because I could never get out of it, no matter what happened. I had to pay that self-employment tax. The guy next door to me who works for a bank, he doesn't pay that. I pay that tax. Now it gets honed down and it becomes more manageable.
Right. Well, and see, the thing is, like, people who are W-2 employees, which that's what you are now, that with the 90,000.
Yeah.
The employee pays half of it, 7.5%. That's what's withheld, the FICA, Social Security, all that. And then the employer pays the other 7.5%. But if you're in business for yourself, and if you're not set up correctly, the IRS considers you the employee and the employer, and that's why you have to pay both halves. Yeah. And lucky you, 15.3%.
One of the cool things is that we talked about that Christina handles all this stuff for you. I just got, all it took to solve this problem was one IRS form that needed to be filled out. Christina filled it out for me, sent it to me, signed this, and sent it back. Done. Problem solved. How easy was that? It was beautiful. It was absolutely great.